Welcome back, and let's continue with the first method, specific identification. So in this case, we have the scenario that we have 3 items that's available for sale. We sold 2 of the 3. How do we know which one we sold, which one we have left? So the specific identification method says, if you have a tracking system tells you exactly which 2 of the 3 items were sold, then the problem is solved. Actually, it is solved, right? Because among the 3, let's say they're cubics or boxes, and put the oldest inventory in the bottom and then stack them up. If you know that the 2 that you sold on the maze are the first one and the third one, and in the yellow color, then you know the CGS is 70 plus 95. You also know, alternatively, your ending inventory is $75. So that's problem solved, because we want to find out what's the cost of the CGS, what's the cost of the ending inventory, by specifically identifying every inventory item in the system, whether we purchase, receive, or have them returned, or sell them out to customers. We solve that problem. Alright, so the next 3 methods required. Each requires some calculation: the FIFO, or the first in, first out, the LIFO, the last in, first out, and the weighted average method. The same scenario. So let's look at the FIFO. The FIFO says first in, first out. So which 2 are the first ins? The one on May the 3rd is the first one. The one on the May 5th is the second first one. And then the one on the May 6th is the third, or actually the last to come into the inventory. So the FIFO and the LIFO methods both make assumptions about which items got sold and which is left behind. So the FIFO assumes that the first come in will be sold out to customers first. Alternatively, which means under the FIFO system, the last one that come in will stay in the ending inventory. Okay, let me repeat that. The FIFO system makes an assumption that the inventory items that first come into, you can view this as a storage place, will be sold out to customers first. So in our case, when we sold 2 out of 3, the 2 must come from the first ones, or in terms of the time sequence, the earlier 2. And those becomes part of the cost of goods sold. We sold them for $250 for 2 units. The cost of the 2 are 70 plus 75 equals 175, so the gross profit is 105. The last one, under the FIFO system, because the first one goes out, first in, first out, so the last one will stay on the balance sheet as the ending inventory. The LIFO is the opposite. The LIFO says last in, first out. Which one are the last in? This one is the first, the very last on the May 6th. This one is the second last one, and we need 2. So those 2 become the cost of goods sold. And under the LIFO system, the oldest ones, or the first ones, will stay on the balance sheet as the end inventory. The weighted average method says, I don't care. I don't assume neither first in, first out, or last in, first out. I treat them equally. How do I treat them equally? I have a weighted average cost of the units, and I use the same weighted average cost for both of the cost of goods sold calculation and the ending inventory calculation. So you notice here there are two things I want to mention about the weighted average method. First, the cost of $80 is used both for cost of goods sold. 80 times 2 equals 160, or 1 unit of 80, that's $80 on the inventory. But 80 never shows up here, right? The three units are 70, 75, and 95. So the weighted average is 80. Unlike in the FIFO and LIFO, those numbers were actually plugged in. And second, very importantly, it's not a simple average of the unit cost. It's a weighted average. So the problem with this example here is it's a simplified form for us to understanding, but I don't want you to be misled here, because each price happens to be only have one unit. That's how you get the average. Looks like you can average the price out by 3, but that's wrong, because what if you have 2 units that costed $95? Then your calculation will be different. So the formula for weighted average, please be very careful here, is the total cost divided by the total units. So if we summarize the three methods, we know the end results are the two variables, the cost of goods sold on the income statement and the ending inventory, or the inventory, on the balance sheet. By definition, every item on the balance sheet reflects its ending inventory. So the cost of goods sold and the ending inventory under FIFO, or first in, first out. So the oldest cost will go to the CGS, and the newest cost stay on the balance sheet as ending inventory. For the LIFO, or last in, first out, the newest cost goes to the CGS. The oldest cost stay on the balance sheet as ending inventory. For the weighted average method, neither the oldest nor the newest cost is used. We use the weighted average cost for both the CGS and the ending inventory. Alright, so let's consider a more complex example. Two things are different. First of all, we have a beginning inventory. As I mentioned, we can just treat the beginning inventory as the oldest, or the first layer. And second is that be careful with the number of units of each patch or each group. So the beginning inventory on October 1st, we have 10 units at $7 each, so the total cost is $70. For the purchase we made on the 3rd, we purchased 30 units, each were at $8, so the total is $240. And then for the purchase we made on the 5th, it's 10 units and $10 each, that's $100. So if you notice, the total available units will be 10 plus 30 plus 10, 50. The total cost of available inventory will be $410. So scenario goes on like, on the 6th, we sold $35. 35 units. So we have a total of 50 units. We sold 35 units. We have what? 15 units left. Okay, so for our purpose here to calculate the cost of goods sold and the ending inventory, we need to figure out here what's the CGS, cost of goods sold, related to the sales. What's the cost of goods sold related to the ending inventory? All right, here you can pause and try to figure out the questions on your own. Start with the FIFO method. What's the CGS under FIFO? What's the ending inventory under FIFO? And then go on to with LIFO and weighted average method. So to recap the information, total available for sale cost is $410. We have 50 units and the prices are different all over the place, 7, 8, and 10. We want to find out what's the ending inventory, what's the cost of goods sold. So if we want to find out what's the ending inventory, okay, we need two pieces of information. First of all, we want to know how many units we're looking at. And secondly, what's the cost of those units. So the first question is actually easier. We have, 50 units available. We sold 35. So what's the units in the ending inventory? 15, right? 50 units sold 35. We have 50 units left. So second, we want to find out the cost of the 15 units. How do we do that? We follow the definition of FIFO. FIFO says first in, first out, which means what's left in the ending inventory must be from the last in, right? From the newest inventory, because the old inventory has been sold. So we're looking for 15 units. So the last inventory, or the most recent ones, we have the last purchase was made to get 10 units at $10 each. So we're going to take 10 units at $10 each. That's $100. But we're looking for how many? 15 units. So we find 10 units. We need to find another 5 units. Remember, we have used the most recent purchase. So we have to go to the second most recent. That is this layer. We're looking for 5 units, and this layer has 30 units, so that's enough. And the unit price for this layer is $8. So 5 units will be costed at $8 each. So $10 each from the most recent layer, and that's $100, and 5 from the second most recent layer, that's $8 each. 100 plus 40 equals 140. And then what's the cost of goods sold? Total goods available for sale is 410 minus 140, we get 270. Or alternatively, you can follow the definition of FIFO, first in, first out. So we're looking at 35 units that was sold, and which one was first in? This layer was first in, 10 units at 7. But we're looking for 75, so that's not enough. We're looking for another 25 from this layer. 25 come from 35 minus 10.